It's 1:30 p.m. in Lagos, same time in London, and we're bringing you insights, analysis, and markets on Business Incorporated. And yes, what's coming up on the program? World Bank President AJ Banga set to visit Nigeria on Thursday. Kenya suspends crypto project WorldCoin over safety concerns. Egypt and Turkey sign agreement to boost bilateral trade. Welcome to the program. I'm Will Ibang. Let's kick off with the markets. First up, major equities in Africa at intraday. Major equities were trading with mostly negative sentiments. Nigeria's NGX was up, however, 0.03%. South Africa, however, was down 1.42%. Now we see in Egypt, the EGX 30 trading down 0.42%, while Kenya closed Monday's trading session well in the green. It was up 1.32%. Now let's go over to the Middle East, where we see markets also trading with mostly negative sentiments at intraday. Abu Dhabi up 0.52% at intraday. Dubai, however, trading in the opposite direction, down 0.43%. Elsewhere, we see Saudi down with three triple digits, down 1.28%, and Qatari index up on the flip side, 1.12%. Now in the Eurozone, unemployment has fallen to a record low of 6.4% as the region's economy defies economist expectations. Joining us with more is Deutsche Welle correspondent Chiponda Chimbelu. So Chip, what's the latest?
Thanks for having me. The Eurozone jobless rate was better than expected at 6.4%. Now, that is 1 percentage point lower than had been forecast by economists. Despite some of the dismal figures that we have seen from business sentiment and manufacturing PMIs, the euro area's labor market is more robust than ever. Unemployment is now at a record low, and the jobs recovery in the Eurozone is almost as impressive as the one in the United States. But there are differences. And if you look at the numbers closely, there are some things that worry economists and policymakers. The data shows that despite record unemployment levels in the Eurozone, Europeans are working fewer hours than they did before the COVID-19 pandemic. Now that means that the average worker is less productive than before. And then, of course, there's also the fact that most of the jobs growth is also happening in the public sector and services industry. Now, these are areas of the economy that contribute less to GDP than, say, manufacturing and industry.
So how are the numbers being read?
Well, despite the better-than-expected figures, economists are warning that the Eurozone labor market is likely to become weaker as the overall economy declines. They point to falling job vacancies in its two biggest economies, Germany and France, as a sign of what's to come. In fact, when we look at Germany, for instance, the fall in job vacancies here has been offset by the surge in openings in public health and education, which are facing severe shortages. And apart from that, the fact that the rise in job vacancies is mostly in the public sector and services industry also means that the benefit to economic growth won't be as significant as it would be if that increase were in industry and manufacturing. So that's why economists still expect the Eurozone economy to weaken. They're basing their forecasts on the wider trends we've seen in recent weeks. And they also know that businesses are investing less in expansion plans as borrowing becomes more expensive with the ECB's last 9 interest rate hikes. The expectation is that we may see companies start laying off staff if they resort to cost-cutting measures. And that, of course, will affect both the Eurozone economy and the labor market going forward.
That's a lot of data to churn out there and to chew on. But how's the market responding to this?
European markets are expected to trade lower today. But it's not due to the latest Eurozone economic data. Today, it's mostly because of the news from ratings agency Fitch, which has downgraded the U.S. credit from its top rating. Fitch says the U.S. government's finances are clouding the outlook for the $25 trillion global market for treasuries. America faces a debt default given the political wrangling we've seen in Washington over the country's debt ceiling in recent years. And there's more bad news too, out of the U.S. when it comes to the U.S. jobs data, for instance, which was released Tuesday. The latest figures show job openings declining, and they are now at the lowest level since April 2021. That's because borrowing costs are now much higher and also affecting business activity. Now, these are trends that investors may see also in Europe later in the year as more businesses here may also slow down hiring because of high interest rates.
Thanks a lot, Chipanda Chimbelu, Deutsche Welle correspondent there with that detail. We'll keep track of what happens on that story. So we'll move on to the UK, where UK energy chiefs will gather in Downing Street today to discuss net zero as a debate rages in both main parties about the future of green policies. Teniola Oyetayo is in London with the update. Teniola, energy bosses are meeting with Grant Shapps amid this debate over the future of net zero. They just signed a license for more oil exploration. What are we expecting from this meeting?
Oh, yes, Will. So leaders of energy companies like Shell and BP are gathered today at Downing Street with a focus on the government's plan for green economic growth. Talks are also expected to focus on the company's plans to invest more than £100 billion in the UK economy. Shell UK has already announced plans to invest £20 to £25 billion in the UK energy system over the next 10 years, while BP intends to invest up to £18 billion in the UK by the end of 2030. Well, this meeting has also taken place amid pressure on the Prime Minister over whether the government should keep its oil and windfall tax after BP last week reported £2 billion in net profit. Shell has also reported huge profits, and this has caused a lot of anger among campaigners who say these energy companies are still making such huge profits while people are struggling to pay bills. And as I'm sure you've seen, there's been a lot of disruptive protests and warnings that critical energy infrastructure could be targeted. So how to avert this is also on the table at the meeting, Will.
Yes, this energy company is making a buck, despite the rising energy costs. It leaves a lot to be answered, and it worries, consumers who have to pay higher for this energy, to consume energy in the country. Now, how are markets reacting to all of this?
Well, it's a rough day for the markets following the move by Fitch to downgrade the U.S. credit rating. The FTSE All Share is down 1.28%, FTSE 100 down 1.25%. The domestic market, the FTSE 250 is down 1.22%. In the currencies markets, the pound is trading down against the dollar by 0.09%, but it's trading against the euro, trading up against the euro by 0.18%, while it's down against the Japanese yen by 0.22%, Will.
So markets are not reacting very good to this Fitch downgrading of the U.S. ratings. We'll see how that, how today's trading ends up. Thank you so much, Teniola Oyetayo, for that update.
Thanks a lot, Will.
Now we'll move over to the U.S., where U.S. stock futures fell Wednesday morning after Fitch downgraded the U.S. long-term rating, and traders continue to assess the latest batch of second quarter earnings result. The Dow Jones Industrial Average futures slid by 0.45%. We see that down there. S&P 500 down 0.71%. NASDAQ futures down 1.08%. Now, Fitch lowered the U.S. long-term foreign currency issuer default rating to AA+ from AAA Tuesday night, citing expected fiscal deterioration over the next 3 years. Now, those moves came after a lackluster first day of trading in August in the S&P 500 and on Tuesday. But let's hear it from Maria Bird.
The U.S. stock market was mixed on Tuesday as the Dow Jones was up by 0.20%, and this was mostly due to unexpected corporate earnings reports from companies like Uber. While the Nasdaq and S&P 500 were lower, the Nasdaq closing at 0.43% down, and the S&P 500 closing at 0.27% down. This is also clearly a sign that investors were a big concern about the market after the Fitch credit ratings were released. The U.S. credit rating went from AAA to AA plus. This has had major concern for many Americans, but the White House did respond and they were not pleased with this reduction in credit ratings. This could have long-term effects until 2025, as it was released that it is clear that many are concerned about the U.S.'s debt ceiling that is set to expire in 2025. Many Americans are watching to see how the White House will respond to this reduction in the Fitch credit rating.
Thanks, Maria. Now, this week we go over to Niger, where the Republic of Niger has announced the suspension of uranium and gold exports to France. Now, this follows the military coup which took place on July the 26th and ousted President Mohamed Bazoum. The authority of heads of state and governments of the Economic Community of West African States, ECOWAS, have intervened in the matter, also announced a wide range of sanctions. Now, Kuala Lumpur, Executive Director, Institute of Strategy and International Relations in Ouagadougou, Burkina Faso, joins me to share more insights on this. Good afternoon, Mr. Umaru. It's good to have you on the program.
Thank you very much, for inviting me to join the program.
And now, Mr. Umaru, what are you hearing about the coup in Niger, and how is it spilling over to neighboring countries?
Yeah, this coup is, a new event that's occurring in the region. Just to remind that this is, from 2020 to now, this is the sixth coup that's, appearing in the region. Now, as neighboring countries, necessarily this coup will have, a huge impact on many ways. First of all, because, we know that this country is also experiencing, the same threat like Mali and Burkina Faso, where we are. And this coup, let's say, when happening, the ECOWAS, have for this time decided not to be, flexible with, this country. And different sanctions that has been taken against, Niger will have necessary impact on the neighboring countries. Because closing the frontiers with, this country, forbidding them to, let's say, have, a sort of a transaction with the other neighboring country, Burkina, Mali, and particularly with the countries that are in let's say, in the coastal areas like Cote d'Ivoire, Benin, and Togo, will have necessary impact on the different, transaction between these countries. This is, the thing that we can just say, for the first time.
So how is this coup impacting economic activities in Niger? We do know that sanctions that you mentioned have been imposed on Niger. Movement has been, restricted. How will this impact? What are the likely impacts, economic impacts on the country?
Yeah, it will have necessarily, a huge impact on the country because we know this is Niger is a fragile country with, a very weak economy. Now, most of the time, they export, let's say, going through, these countries like, yes, Burkina, Mali, and particularly they export through, Cote d'Ivoire, Benin, and Togo. Then if this sanction is, as they are applied now, that will have necessary impact on the transaction. And we just remind that the West Africa Central Bank has just closed, its agencies within the countries, which means that the different transaction and the money withdrawing is not now possible. And this will necessarily, affect the countries. And I think this sanction before, let's say, the end of, the deadline put by, the ECOWAS will necessarily start having, effect before, this military intervention that is, let's say, a threat for this country. And necessarily, I know, by experience, because knowing also Niger, that they cannot, resist. And by the coming days, things will be clear in terms of economic impact on the country, because now they are closed. Maybe, hopefully, Burkina and Mali, from the communique declaration, let's say, promising to help this country. But we know that Mali and Burkina Faso, this is just a declaration, but they are not able just to, support, Niger economy, which means that the coming weeks, the coming days, are very crucial for this country.
Thank you so much, Mr. Paul, for that explanation and insights as to what's going on in Niger. We do hope, as you say, that more clarity will come out as to how this will impact Niger in terms of their economy. Thank you so much, Mr. Paul, Executive Director, Institute of Strategy and International Relations in Ouagadougou, Burkina Faso. Thank you so much.
Thank you very much.
Welcome back. Now we'll go over to Zambia, where its annual inflation for July 2023 has increased to 10.3% from the 9.8% recorded in June 2023. Now, the Zambia Statistics Agency, ZAMSTAT, says retail prices between July 2022 and July this year shows that national average price of a 25 kilogram of breakfast mealie meal increased by 39.75% from 161.98 Zambian kwacha to 226.37 Zambian kwacha. Now, economic analyst Jean-Marco Capati joins me to unpack this. Good afternoon, Jean-Marco. Inflation has been easing in Zambia, now back to double digits. How did this happen? What factors contributed to this? Can you unmute your mic, please? Jean-Marco, can you hear me? Can you unmute your mic?
Hello, can you hear me now?
Yes, I can hear you.
Great. So I was saying inflation has gone back up to double digits, yes, and the July outturn of 10.3% is actually the highest print since April 2022, so just after the start of the war in Ukraine. I think this is the result of a combination of factors, but you're right to point out that food price has been a key driver. So if you look at the data, that 40% jump in the price of meal from a year ago, most of that has happened in the last couple of months, really. So Zambia is estimated to have collected around 3.2 million tons of maize in its main harvest in June. That's still above what's required to meet domestic consumption and therefore to export to neighboring countries. It's not spectacular, and the problem is that bad weather conditions in several parts of the region have pushed up demand for Zambian cereals and prices as well. And that's why the Zambian Food Reserve Agency has raised the price it pays to buy maize from domestic farmers by 50% recently. And that is just to discourage smuggling to other countries, which has been happening since January, especially to the Congo. Now, the rising grain prices on a global level last month after Russia pulled out from its grain deal with Ukraine, that's also partly to blame. But I'd say above all, the appreciation of the kwacha, particularly against the South African rand, really raised the cost of imports.
So you just mentioned the kwacha right now. I would like to know how much impact this rise in inflation has had on foreign investment, and especially in the currency, the kwacha.
I would almost look at it the other way around. So the volatility in foreign investment, especially in the bond markets, has been a key driver of the kwacha's depreciation, which has then fueled inflationary pressures. We have seen a very lengthy debt restructuring process since the country's default in late 2020. Now, an agreement to restructure more than $6 billion in external debt was finally reached with official creditors in June, and that led to a rally in the kwacha that month. Unfortunately, the currency started depreciating again in July. That, to me, signals that this was already priced in by markets and that investors are now closely watching whether the government can also clinch a deal with private creditors, and especially holders of the Eurobonds worth $3 billion. That would be the last stage of the restructuring process and would provide some clarity to investors on the country's debt sustainability, and would obviously then support the kwacha and ease important inflation. In terms of foreign direct investment, we've seen a few new investment announcements by major mining companies in the last couple of years, but this hasn't really led to an increase in mining output and exports yet, which continue to fall as of Q1 of this year. So that's another challenge at the moment that's just limiting gains for the kwacha and keeping inflation higher for longer.
As well, look at these limitations. We've seen the African Development Bank in their latest Southern African Economic Outlook saying that the Zambia inflation is expected to decline to about 8.5% in 2020. That's this year, and 7.1 in 2024. Do you agree with this projection?
At this point, I think the 8.5% forecast for this year is a bit overly optimistic, given the latest jump in inflation in July. So far, it's averaged about 10% this year. Still think it's going to come down quite a bit over the rest of 2023. And one of the reasons is the sell-off of the kwacha in Q4 last year. That's going to provide favorable base effects for inflation. And the second potential reason is a possible deal with private creditors that will offer a further boost in investor confidence and ease pressure on the currency later in the year. Now, having said that, I'm thinking more of an average of 9.5% this year, and only slowing towards that 8.5% by year end. And I think 7% for next year seems realistic, but I would still keep an eye on the food price situation, particularly in the context of the El Nino weather event that could bring more drought to the region and for the reduced food supplies. That's a major upside risk.
Also keeping an eye on food prices will be the central bank in Zambia. What stance do you see the central bank taking on monetary policy?
So the Bank of Zambia has been tightening monetary policy since February. It hiked the policy rate by 25 basis points in February and again in May. And there's a high chance we'll hike again later this month. But this is not aggressive tightening by any means. And the policy rate is at 9.5%, which is fairly accommodative. Overall, the central bank has retained this dovish bias under the current governor. But I think one of the reasons it hasn't been more aggressive is that inflation is being driven entirely by supply side factors. So tightening financial conditions is not going to help really. And the sentiment-driven depreciation of the kwacha and the rise in regional grain prices are the main factors driving inflation in the country, and they're clearly beyond the control of the central bank. So I think any further tightening will remain largely ineffective, and inflation will eventually come down for other reasons.
Thank you so much, Gianmarco Capati, for sharing your insights on the program.
My pleasure.
Now we move to Kenya, where the Interior Ministry says it has suspended the local activities of cryptocurrency project WorldCoin while government agencies assess potential risks to public safety. The project, founded by OpenAI CEO Sam Altman, launched last week, requires users to give their iris scans in exchange for a digital ID. The ministry says relevant security, financial services, and data protection agencies have commenced inquiries and investigations to establish the authenticity and legality of the activities. It adds that the government is concerned with WorldCoin's activities, and agencies would probe how it intends to use the data it gathers. Now, Egypt and Turkey have announced plans to reach bilateral trade level of $15 billion within 5 years, and that's according to the Turkish Trade Ministry. The countries reached a mutual agreement for a roadmap to strengthen trade relations during a 2-day visit of the Egyptian Trade and Industry Minister Ahmed Samir Saleh in Ankara, Turkey. The agreement also includes support for bilateral investment to ease conditions for investors. The bilateral trade volume between the two countries is currently around $10 billion. Now, the World Bank President AJ Banga will begin a 3-day visit to Nigeria Thursday, August the 3rd. That's tomorrow. And this is the next step of the global tour that is at the center of a mission to write a new playbook for the 78-year-old institution. Mr. Banga will focus his time in Nigeria on identifying opportunities to create jobs for young people and women, addressing energy needs and renewable energy, and further exploring the potential for digitalization. While in Nigeria, Banga will meet with President Bola Ahmed Tinubu and Vice President Kashim Shettima. In addition, there will be discussions with representatives from the private sector and civil society. Banga is arriving after a 2-day visit to Ethiopia and will be joined by his wife, Ritu Banga. And that's a wrap on Business Incorporated. Join us tomorrow for another edition. I'm Will Ibong. Thanks for watching.